Well, stocks ended 2011 mixed, with the Dow up 5.5%, the S&P 500 pretty much flat for the year. Markets started the year heading higher, but the big question, of course, is where will they finish? Abby Joseph Cohen is a senior investment strategist and president of the Global Markets Institute at Goldman Sachs. She joins me now. Abby, thank you for being here.
My pleasure.
Let's start very broad. Your big predictions for 2012.
The big predictions relate to two different topics. One has to do with the path of economic growth, not just in the United States, but around the world. And the second big area, of course, is the direction of policy. In the United States, we are beginning a major election year because of the presidential cycle. But of course, there are those big decisions to be made in Europe as well. And right now, most investors are being very cautious about the impact of political developments in the U.S. and Europe, and just waiting to see what does happen.
Taking the U.S., first of all, will a lack of togetherness, if I can use that word, in Washington, will a stalemate in Washington really cripple any hopes for an equity market revival this year? Do investors really care that much about D.C.?
Investors do care about Washington, and I think that the experience of 2011 was really a very sobering one for many investors. While it is true that the U.S. Treasury market performed quite well, and of course the U.S. stock market was the best performing equity market, just being relatively neutral for the year, investors are concerned the Congress didn't fail to disappoint last year. We have some important issues to deal with. One of these, of course, is the deficit. Of course, it's the long-term deficit, the one that kicks in when the baby boomers retire over the coming years, that matters a great deal more than the short-term deficit, which is much more related to the sluggish pace of economic activity.
You said recently that stocks will stay undervalued until confidence is rebuilt. When it comes to confidence in Washington, there's a lack of it. When it comes to confidence in European regulators, there seems to be a lack of it. So how are you advising investors then when it comes to Europe specifically?
Our European teams are saying the following. First, we believe the chances of a recession are extremely high. In some countries, it may have already begun. And so the first half of 2012 doesn't look very promising, either in terms of economic growth or in terms of equity markets. However, we're feeling somewhat more comfortable in the second half of the year. The general presumption we are making, and we'll find out together if this is a good assumption or not, is that the policymakers will gradually find ways to move forward in the coming months.
You've recommended recently investors focus on high-quality names we all know, some blue-chip names, I would assume, companies with a lot of cash, strong PE ratios, nice dividends. So is this not the year for risk-taking or even emerging market investment?
What's fascinating about this year, of course, is that there are three plausible scenarios. The one that most people are sticking to right now is the muddle through. Global economic growth slows a little bit because of the recession in Europe, but the United States does better. However, because of the political uncertainties, there's an unwillingness to pay very much for those earnings. PE ratios don't move very much, and the overall equity market doesn't perform particularly well. But there's also a much more pleasant scenario. So, for example, in the United States, GDP growth ended the year probably well above 3%. We're seeing that the job creation machine in the private sector is looking somewhat better. We see that companies are investing in equipment. Basically, they're showing some confidence in the future. And so if we, in fact, see the economy moving forward, profit growth perhaps less vigorous than it was last year, but still positive, and we get some multiple revaluation, that is, PEs move somewhat higher, you could see somewhat better returns than the base case here in the United States.